Hi, I'm John Stewart, Chief Investment Officer of Farmers Trust Company. This is the Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.
Hi, I'm John Stewart. Welcome to this week's edition of the Investor's Edge. First up, the week in review. Jobs weak, inflation hot, taper on. So the September payrolls report was released last Friday and it wasn't pretty. It was expected September would bring about an influx of workers back into the job market since expanded unemployment benefits ran out at the beginning of last month. Instead, the opposite happened. More people left the labor force. Just 194,000 jobs were added in September versus an expectation of 500,000 new jobs. Meanwhile, the labor force actually declined by 183,000 people, mostly due to either retirements or people who decided to stop looking for work. It's not exactly encouraging news given the continued labor shortage that is clearly evident to anyone who's paying attention. It's no coincidence, therefore, that inflationary pressures continue to be an issue. Supply problems, including the supply of labor, are sending up prices at the fastest rate in 30 years. Consumer prices for September, which were released earlier this week, rose 0.4% versus a 0.3% rise that was expected. On a year-over-year basis, prices are increasing by a whopping 5.4%. So given the persistence of the inflationary pressures we've seen, the Federal Reserve said it will likely taper the pace of its monetary stimulus starting in mid-November. So far, the markets seem to be taking this news in stride, despite a bit of volatility here in the past few weeks. For this week's featured insight, the art of valuation. Valuing stocks is challenging under even the best of circumstances. If it were as easy as just buying stocks that appear cheap based on some valuation metric like price to earnings or price to sales, everyone would be rich. No one knows with precision which valuation model should be used for any particular stock, and the valuation models themselves are subject to variables and estimates about what happens to be a very uncertain future. So picking individual stocks that outperform the market is ultimately more of an art than it is a science. Investors must synthesize information about a company's valuation, but also about business and industry trends, the quality of a company's management team, and the overall sentiment of the market toward a particular stock to determine whether or not it's a good buy. So make sure you consider all the angles before delving into the world of individual stock picking. Looking ahead, third quarter earnings. Corporations began reporting their results for the quarter ending September 30th this past week. And overall S&P 500 company earnings are expected to be 25% higher than they were for the third quarter of 2020. They'll actually probably be closer to 30% higher once they're finished being actually reported. Sounds like good news, right? Well, not so fast. The third quarter is already in the history books. What really matters is whether or not guidance for the next 2 quarters and beyond is higher or lower than analysts currently expect. Will companies start to offer more cautious guidance as supply chain issues or labor shortages start to crimp sales or profit margins? Certainly possible. In fact, the early reports are showing signs that this may in fact be the case. We'll have to wait and see, though, as to whether or not a broader trend develops. Once again, I'm John Stewart. Thank you for watching The Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.
Thanks for watching the video. Be sure to like, subscribe, and hit that little bell for notifications. And also make sure to connect with us on Twitter, Facebook, and LinkedIn. For all of your business news, visit businessjournaldaily.com. For all of your arts and entertainment news, go to afterhoursyoungstown.com.